All right, so this is another backtesting session for June 21st. Overall, it's just refining my strategy. This time, I'm continuing to use Bitcoin, where in my strategy, a swing high forms or swing low, but I'm going to stick with swing high here. And then the second swing high is either at the same level as the first swing high, or it pushes past the first swing high and then it forms. And then one of two things happens, which one of them is that we get an order block right here. If this part right here was the last candle, we would find an order block here and wait for price to retrace into here and then scroll down onto a smaller time frame, wait for the break of structure to the downside, short it with a stop loss below or a stop loss above here, and a take profit at whatever the previous area of liquidity was, which would be right here. So either wait for that to happen or we wait for the same thing to happen with the two swing highs, but then price moves so starkly in the opposite direction that we really have no time to retrace, or we really can't retrace into an order block. So we just wait for price to retrace into this fair value gap, break of structure down on the 1 minute. We set our stop loss again above here and our take profit at whatever the previous area of liquidity was, which would be down here. So I've done 10 examples and obviously, if this was real life, I would trade this in between New York and London session, and I would aim for a RR of anywhere from 1 to 1 to 1.5. So nothing crazy, but I still want to get decent value on every trade I take. I marked out 10 examples, including one that I never took a trade off, but I just marked it out that's happening live. So the first example here on the 15 minute, I'm doing this on the 15 minute and then scrolling down to the 1 minute, unless I'm not able to because I can only load 5,000 bars. So here, this one is very simple, very similar. We have a swing high right here. Price comes down, takes out this swing high. In doing so, forms equilibrium. Sorry. Sorry. In doing so, it forms equilibrium. As we can see, price retraces into this order block right here. So what I would do is, I think I can load it on the 3 minute, but I probably can't on the 1 minute. I would just go down to a smaller time frame, this as small as I could get, and wait for the break of structure on the downside, which happens. This barely just gets wicked. I'm sure if I went on to the 1 minute, I could find one closer up here, but it happens when price breaks below this low. So really, I could even move it up here if there were separate candles and this was one candle, or this was one, or sorry, if this was broken down into smaller candles, I could find a better trade. But assuming I would just put my I would enter the trade right here. I'd set my stop loss above here. So I'd maybe just move this up a tiny bit more. And then I'd set my take profit at this previous area of liquidity and maybe even um, down here. So just a little bit more. And that gives me a 2.45 RR trade, which would have gotten hit. Um, So that's just a basic rundown of the order block version. I'm gonna see if I can find my fair value gap way. This is the one we just did. This is the next one where I believe I've done this one multiple times, or I've just analyzed it multiple times, but it's just such a good it would have been such a good entry right here. And I could have gotten such a big RR off of this. And each time I look at it, I just see like how I could have better executed off of this one trade. So this one, price makes forms this order block after price um, comes down and then it retraces up and then down, which is why there's two red candles, but one of them's above the other. Is price, I believe, came up and then down, so that forms an order block. Comes out and then retraces back into it first here and then here. Here we don't, or Here we don't get very good equilibrium. I believe here we get better equilibrium. Either way, price breaks structure out of here on a lower time frame. I'm not going to go into it just so I don't lose my place, but once price does break structure to the upside, I would enter off of this and then set my stop loss below here as it is and take profit probably up here, if not up here or up here, and all of that would have gotten hit. For the third trade, we have, or I would have swing low here, another swing low right here. Price forms this order block, so you can see price retraces into it. I think we're close enough to the current that sorry. Um, price as soon as price breaks structure, which would be right about which would be here, but I could go down to the 1 minute and find where this is broken up into smaller candles. Ideally, get one or close to here or at least over here. And that could give me up to a 3-to-1 RR off of this retracement into this order block and the break of structure because I'm setting my stop loss below here, take profit up here. And ideally, if I had the ability to, I could maybe even target this previous area of liquidity, which would have given me, it's about the same level, about a 4.45 RR trade. So I could have, and then ideally I could go even further, find an even bigger RR trade, and that still would have gotten hit because all of these confluences were there. Again, here, quite similar. Price makes a swing high, and then the second swing high over here makes the order block. So this is the first swing high I'm looking at, and this is the second one. This is the one that I counted as forming the order block. Price comes down, makes this equilibrium. Price retraces into this order block. Although you could also argue that this is that was all just one swing high. This was the second swing high, and this forms the order block. Either one would have worked in this situation. And then as soon as price retraces into both order blocks, actually, um, I would just wait for a break of structure, which comes on this candle right here. Enter stop loss above here. Since we had such a stark bullish move right here, we can just set the stop loss here. Although we probably could have even gone, um, I could have gone down here to be quite honest. And from the what it looks like, I could maybe even set that as one take profit and then set a super risky take profit all the way down here. I just want to see if that would have gotten hit. And it looks like that was maybe a little bit too low, but that would just be a multiple take profits. That'd be a 14-to-1 RR trade. That would have been, I would never have taken that trade in real life, but I think it just shows how much just how much power these confluences can have that I can get. If not a 14-to-1 RR trade on that, I could probably get if it hit this low right here, a um sorry. I guess I could have gotten like a 7 or 8 RR trade, which would have been still really good. So here, this one's a little bit different. This one was a fair value gap retracement. I see swing low right here. Second swing low doesn't quite get as low as the first one, but price never really seems to retrace. However, on a larger time frame, this is a um sorry. This does form a fair value gap on the 15 minute that gets almost fully pushed into right here. Again, one of the things I like about Bitcoin is that it seems to respect price, like order blocks, equilibrium, and especially fair value gaps a lot more than USD Canada, which is why I'm considering bringing fair value gaps back into my trading strategy for Bitcoin. So price retraces fully or almost fully into this. It has like a tiny bit of room, but it does not, but it does retrace almost fully. So as soon as I get that, I would just get a break of structure on a smaller time frame, which would be just like pretty much either here or just pretty much anywhere. Once price break structure up here, I guess I'd do it. And then if this gives me a less than 1-to-1 RR, I would target this area of liquidity or maybe even up here, this area of liquidity. So that's how I would have executed off of that. I guess I just messed up the setup before I started this. And as soon as that's how I would have traded a fair value gap, where as soon as it retraces and it breaks structure to the upside, I'm entering stop loss below here, take profit above here, maybe even above here if I was feeling confident, and 2.23 RR, and that would have gotten hit, of course. Here, price forms on two swing highs once again right here and right here. I don't exactly know if these two count as swing highs, but that's just how I viewed it. And then price completely dumps, it completely rug pulls, and we get a small retracement right here as soon as it breaks structure to the downside, which I would just find a I would just find on the lower time frame a break of structure to the downside, which since price consolidates here would be easy to find as soon as price comes up, and then the sorry, it closes below. Sorry. So as soon as this fair value gap starts moving downwards, or I could just scroll down into onto the 1 minute if I wanted to get like a really good RR, I would enter off of that trade. I'm not the best at finding these breakup structures, and some of these I set up aren't perfect setups because I didn't put the entry exactly where it should be, and that's one of my areas of improvement. I could set stop loss here, here. I could set it definitely a lot more ambitious than just here. So down here, I could have maximized it even more and gotten a way better R off that trade. 3.3%. That's very good for me. And because this is, again, just like the BOS is a little bit shady, and with a lot of the with all the trades where the BOS is shady, this would have been a 0.125% trade. All the other trades, especially with the order block, since I'm more familiar with that, would be a 0.25% trades. And maybe if I got one with all of my confluences that I felt really confident about, I would risk 0.5% on this. So again, this is very similar where price forms a swing low. Second swing low is sort of the same as the first swing low, but not quite. But that's because price just really wants to move up and price forms this fair value gap. I'm going to scroll onto the 15 minute to um, show this is it, I believe, um, where price forms this fair value gap, retraces into it. It has a little bit of room, but it almost fully retraces into it. As soon as I get a break of structure, which I'm going to go back onto the 3 minute for, is keep losing my spot. Right here, as soon as I get a break of structure, which is right here. Anyway, I messed this part up again. Which would technically be up here. This is when I would enter because price doesn't break structure quite yet, just off of this or right here. And then I would set my take profit likely at this area of liquidity or this previous area of liquidity, which unfortunate or never mind. I thought it wouldn't have that level wouldn't have gotten hit, but it actually did. That's the other thing about my trading strategy is that I feel like I just have to wait a long time to hit take profit when most traders, I don't exactly know how long it takes to make a trade like for a trade to execute fully and either hit stop loss or take profit, but I'm always sitting on my hands for a few days worrying about whether a trade will hit or not. And so I think that's more swing trading, but I'm not entirely sure. Again, here, price forms a swing low right here, new swing low over here, order block this last move down. Price retraces out of it, forms this equilibrium. It sort of hits a ceiling and then it comes back down into this equilibrium. Soon as price breaks structure to the upside, which happens right here, actually, or no, it happens right here because price closes above this green candle right here. I enter off of it. I would honestly, I keep selling myself short with these take profits. I could set it here, or I could set it up here, or even up here, if I had wanted to, and that'd give me a 2.7% RR trade, and that would have, of course, hit. And I feel like I'm just, this kind of made me realize that my biggest weakness is not setting take profits as not being as risky and maybe as ambitious as I should be with these take profits. Again, this is very similar, or this is a fair value gap version where price forms one swing high, price comes down. It forms another sort of swing high. I wouldn't really consider that a swing high, but price does kind of revisit this peak. Price moves very starkly down, or not, sorry, price makes a sharp bearish candle and retraces into it as soon as we get the break of structure off of here, which happens as soon as price closes below this low, which is right here. I enter stop loss above here, take profit all the way over here, and I could have even set it down here or even down here, and that would have been a 3.84 RR trade, which would have hit not 2.52, 3.84 after the break of structure to the downside. And this is the last trade. This trade is still live. I didn't really take a trade off of this. I just drew the box in advance. What I made is price retraces into the fair value gap after the stop loss, which is price moves up bullish. Price retraces right here and then it breaks structure to the upside with this candle where it's high, low, higher. And then I just went on to the 1 minute and um, this forms another fair value gap as soon as price, I should move this up a little bit. As soon as price breaks structure on the 1 minute, then I would enter and I would put my stop loss at here, take profit. Really, even though I set my take profit here, I could even set it all the way up here, and I still believe that would hit. We're in this right now. So far, it's in the green, so price is moving in the direction I predicted, but I'm not entirely sure that that's going to continue. So overall, I believe that was 10 trades that I could have taken. I believe I went over this one, very similar retracement. And that's really just how I plan to keep getting better at Bitcoin. Just 5 to 10 trades on Bitcoin, 5 to 10 trades on USD Canada. And then ideally, I'll be at least semi-profitable by the end of the year. So I'll see how that goes. Thank